Well, thank you for the opportunity to speak today. I do want to talk about grain markets. I think overall, it's not a surprise that we find ourselves in a situation with moderate to low prices. And, we have growing supplies, not tight supply-demand balances, pretty good demand spurred on by low prices on the one hand and some other factors, and impending harvest already started in some areas. That would cover the fall harvest of crops. For wheat, we have a bit of a conundrum, I think. We've got strong U.S. wheat exports at the moment, but weak to declining prices. Some of that's in sympathy with the fall harvest price moves, fall crop harvest price moves, but still pretty weak wheat prices in the light of pretty strong demand. We'll talk about that as we get to wheat. So I do want to mention a little bit. Oh, okay. There we go. I do want to mention a little bit about trade issues. We've got various factors to consider for trade. When it comes to grains, of course, we have had a case before the U.S. Supreme Court, challenge from different parties with regard to the legality of using U.S. tariffs as a tool to control fentanyl or other factors, as opposed to a direct trade conflict. No argument really on such things as steel and aluminum. You've got a unity of countries taking action against a few, China, others to protect themselves. They see that as an exploitation, i.e. quasi-dumping of goods from a domestically supported industry into U.S., Canadian, other markets. So these countries have banded together and done that. The aggressive actions of the Trump administration have been brought into question by different folks. And we're, I guess the most polite thing to say is we're finding, hopefully we'll have clarification, which is a nice term for economists to rest on. And with regard to retaliatory tariffs, we see them bantied about and in some cases implied, but I don't think that's the biggest issue. If anything, the market power of the U.S. and in allowing basically have a fairly strong, at least a fairly strong U.S. consumer economy has been a motivator for U.S. to make use of their market power to impose tariffs. I think this is happening though in large manner. It could be a short-term thing and also have long-term ramifications. So something for us to be concerned about in the long run, in that countries that find themselves having tariff actions against them from the U.S. Will seek in the short run to band together. Again, we hear the BRIC countries and others working to trade amongst themselves. You see China going exclusively to South American countries to buy soybeans. China backing away from U.S. grain sorghum in large manner. So you certainly see these actions. They're short-term actions, but they can have long-term repercussions. And it's worth thinking about that. If a country feels that their domestic consumer markets, domestic use, are at risk by trading with the U.S. because of the possibility of what they view to be tariff actions that can be, I hesitate to use descriptive terms that just get me in trouble, that they feel are somewhat arbitrary, then they'll look in the long run to protect themselves and go elsewhere. So that probably is a thought or a fear at this time. And you've seen that over time with regard to Russia from years ago in the Carter era, having an embargo against them, and now they were a major importer of wheat into the U.S. for this motivation and others. Russia has increased their wheat production. Now they're a major competitor, a number one wheat exporter in the world. So that took, if the 1980 was that embargo, well, here some 45 years later, where you've seen changes in that, and you've seen China invest in other countries around the globe. Here are discussions about in Africa, South America, and their transportation systems elsewhere that they're seeking to insulate themselves a bit from the risk of having tariff trade actions taken against them that they view are putting themselves at risk. So that's something to be wary of in the long run. And you've got this idea of an optimal tariff. What is a good tariff to have? I didn't listen to Brian Brigham-Briggeman's discussion earlier at Garden City. He'd mentioned something about how, in talking with people from financial industry, either government or private, talking about, well, if we had like a 10-15% tariff, we'd adjust to it and then move on. I'm not sure if you mentioned that today. It did yesterday. So somewhere in there is, it's worth raising the question, is there an optimal tariff rate for the U.S. to imply, and is it the same across all commodities? Obviously, we feel compelled to protect our steel and aluminum industries from this, but that's very specific. That's not across the board. So anyway, interesting to consider that. I do want to talk about weather issues. So when we look at the weather conditions, or the soil moisture conditions, I guess, better to state, in the U.S., here over the last month or so, in particular, we've seen dryness creep into parts of central and eastern Corn Belt, particularly Missouri, Illinois, Indiana, Ohio, etc., and wetness in Nebraska. Well, pardon me, Kansas, Nebraska, up into the Dakotas. Kind of a Western Corn Belt versus an Eastern Corn Belt thing. Kind of a quiet barometer on this is to look at the ethanol plant corn bids by state across the U.S. Corn Belt. You find the highest corn bids actually are in the Eastern Corn Belt. Again, you'll see them in parts of Illinois, Indiana, Ohio, etc., up into Michigan, and the lesser bids are in the areas that aren't showing drought. So it seems that in areas where they probably have a little bit more concern because of latter part of the season drought conditions for corn and soybeans, corn for ethanol plants anyway, that we're seeing some higher corn bids. So we'll see how that plays out. Then you have, I guess, this view of how the rest of the world looks at our crop conditions. And this is a satellite view, RIT zone-based soil moisture drought indicators from NASA. More of again, satellite-oriented. You can see in the world's view, we have pretty wet conditions. Does that hold up around the rest of the world? Well, in some major production parts of South America, you can Mato Grosso, these names for regions that we hear of, Argentina, and some of these areas, for the most part, you've had pretty good growing conditions in South America. Now, this is, as of present, how were they going through the year? Generally held up. If anything, they were a little drier earlier in South America. Rains have come, not so concerned. At this point, we're more concerned about, is it too wet in some of these areas, particularly Argentina, to actually get the crops in? So we'll be watching that. And you've got, in particular, the risk of dry conditions developing in the Black Sea region. And when you look at other weather maps, you don't see as much dryness as is indicated on this particular indicator. But Europe, Russia, Ukraine, all being pretty dry. You get down to around Kazakhstan and these other areas, all indicating some dryness, but yet really not. These numbers aren't showing up in large degree in the USDA and in country numbers yet. Not major issues with regard to problems that could be coming in China or in India. Some dryness along the border, but nothing major. And then, of course, down in Australia, some dryness to the west, They have wheat production, et cetera, west, generally in the eastern New South Wales, areas like that, generally pretty good. So you stand back and look at that. Where are there problems in the world? Well, if there's anything, probably we're wondering about Europe and the Black Sea region. And those are the main areas that we're concerned about. So what about corn markets? There was a grain stocks report that came out yesterday, and you can see some changes that came out of that. It's minor changes in the size of the 2024 corn crop. Ended up with a little bit higher ending stocks coming in, raised by about 200 million bushels. For Glenn, on the feed side, you've got this little indicator that there's a scaling back of about 180 million bushels in feed use last year. So is that a big issue? It may or may not be. And talking to Glenn earlier, that's probably consistent with some shaving back of the pork herd pardon me, swine feed usage that came in, but not a major issue that will come into play. Although this number here will end up in the ending stocks for the 24-25 market year will end up with about 200 million more beginning stocks for the 25-26 marketing year. And in terms of stock numbers, again, about 1.5 billion bushels. Again, September 1st, beginning stocks, there's that number again. So this ends up with a little bit more of a, I guess, a little bit more supplies on the corn market, and probably a little bit more of a lessening of price prospects for this coming year. So for the 25-26 marketing year. So anyway, you come in and look at Dees corn, and yes, it's been bearish. It's not a surprise to anyone. You do see that we had a long-term trend starting back in March 25. This is for the Dees 25 corn contract, Dees futures. Came down to a low in around the time of, well, in August actually, when the market overall took the opinion up that, well, we're not worried about the size of the crop. We're gonna have a large crop. So price that in, and since that time, well, and actually I think this came out, this is about the day of the, this is August 12th, when the first USDA NASS crop production report came out, said 188.8 bushels per acre, crop size of 16.7, I think, billion bushels. So that was the date of that report. Since that time, we'd come back up. In essence, some, I wouldn't say disbelief, but real skepticism as to whether we'll get actually that much, that high of a yield. So it came out in the September report, and USDA did scale back the yield to about 186, but then added about 1.5 million acres of corn. So neutralize that, still about 16.8 billion bushels. And so this is the trend we're looking at. Some moderation of worst case scenarios, but still looking at a Dees corn price heading into harvest, just holding above $4. And did want to show that, well, so if that happens and we have low prices at harvest, we're probably going to be storing a fair amount of corn. So it's worth looking at the carrying charges to see what at least your ag lending customers will be facing. You know, will they be selling their crop at harvest? Some will, particularly if they have good forward contracts that they had made earlier, or they have bioenergy plants, livestock feeders, whatever that they might sell into. So when you look at as of this morning at about 5 o'clock, as I was looking at this, overnight trade had about 413 for the Dees futures price. And again, from September to Dees, that's about, just as futures carry goes, just under 5 cents per bushel per month. From Dees to March, again, about from 413 to 430, for 430 to 439 to 436. So, you know, around just under 5 to a little bit over 5 to about 5, et cetera, in terms of carry. And you look at whether this covers the cost of carry, looking at this would be on-farm storage, about 2.5 cents per bushel per month at about 5% interest. And I was in here for that question on Greg's, but it was given to Greg about what 5% interest rates represent. So I'm gonna fall back on what he said. It's kind of an agglomeration of everything, but at least we're looking at interest costs for storage for unsold grain. So market carry from Dees contract to the March, about 16 cents over that period. Full cost to carry about 27, 28 cents. So as we sit here right now, it's about 58% of carry. If you carry from Dees out to May, again, a little bit less, about 55% carry. So does that mean everybody should sell at harvest? Well, if they don't have storage, they're probably going to sell at harvest. But if they do, they'll look at what's available now in the market, and they'll make the decision of whether to trust that number or to rely on post-harvest increase in futures or narrowing up a basis to pay. Almost universally, year after year, we've bet on some post-harvest increase and some narrowing a basis. But as the numbers sit right here, to look at tying in, if you went to hedge on the futures, not accounting for basis improvement, we wouldn't be covering, we'd only be covering about 55, 58% of carry. Interesting. So stand back, and I think when you put pressure on an economist and you say, well, the current situation looks bleak, then what does he do? Well, he starts to lengthen the horizon that you're looking at to see how many times over time have we been in situations like this and stayed there and not seen something change. So just, and my contention would be most of the time until we get a drought, a policy change, ethanol increase, a war overseas, again, Black Sea region war causing a lot of speculation in the world. Most of the time, unless we have some change like that, we're about where we're at. Here at 413, you can go back and look at, again, tight growing conditions, low interest rates, energy prices high, 2007, 2008, just after ethanol came into play, was established in the late 2006. So ethanol plant growth coming through here. And then tight supply demand conditions in 2011, 2012. Thought we were over that. Then had the drought, the 2012. After that, there's 2012 run up. After that, we waited into 2013 until we were sure we weren't going to have another drought. And then the markets fell off. We came into this time frame of relative stability without any major upheaval, no changes in policy, no new droughts coming in, and we kind of hung out in the about arguably right through there, you're just about 350, 360, 370. With sometimes in the summer a little bit higher than that. Came into Ukraine, Russia, and other factors drove the market higher, have come back down now, and had a low, actually latter 2024, 385, ran back up this last summer on, fairly decent demand, 518, are back now about 413. So it's, I've heard people talk about, well, what we should plan for the future for grains. Well, it's notoriously difficult to do that because we seldom have times of stability where it never changes, where a drought never comes in, there's not a war or a drought overseas, etc. So if we had that, we would look back here, this 2014 14 through 17 time frame and say, well, you know, we had pretty stable conditions, but we still had 20, 30, 40 cents differential and change. So I guess it's not a very docile neighborhood that we live in with regard to the grain market. A lot of variability, ups and downs, lots of change. And 413.5 as to where we're at right now. And again, so harvest coming on, we're hanging around just about at harvest lows. I would think this would be the 1 year it doesn't happen, where maybe this will be the year where we have flat prices all the way out. But that's just really uncommon. We just don't tend to see that. We'll see. Cash prices. Yesterday we were in Garden City, and really, i.e. probably the demand center for the state, had prices overnight, and applying the base levels from yesterday to the prices at that time, about 408. Here we're in eastern Kansas, around Salina, Topeka, arguably between the two of them, catching a lot of where we're at. 378, 373, something like that. Again, 36 to 41 under. New crop, pardon me, this is the October bids for November, just a little bit of difference. So not a lot going on there. It is noteworthy that corn prices, for as rough as we see corn prices, the wheat market's worse. And that's not necessarily good because we're involved in wheat too. But the ratio of corn to wheat prices in the Garden City area, where we have the feedlots where we could see it, where we could feed it, is 99 cents. So the wheat price is a little bit underneath corn price. We're going to have enough corn. We're going to feed corn. But wheat's there cheap enough where you could feed that too. And we do have basis issues 2025 corn basis levels. This blue line, you can see this is in the Dodge City area. Again, traditionally strong basis region, and basis of about 15, 20 under there happens to be at the particular location. And that's the weakest we've seen in several years, consistent with the cash market weakness. Salina corn basis, again, 50, 55 under, weakest we've also seen in several years. So it's harvest. And we don't, I'd contend that my good friend Guy Allen's in the room. We talk a lot about these issues. We don't have delivery locations for the futures in our backyard, and we'd have to go to St. Louis. We really don't have a mechanism in the feed grains to force that could be available to force these basis levels to be much better. So given that, we have this issue for corn, we have this issue, and even more so for grain sorghum. That's an issue to discuss another day. So I'm going to see here in just a minute the U.S. corn yield. I'm going to show you some scenarios for where I think the corn market's going to go, where the USDA numbers, assuming we get a report, the next report coming out on October the 9th. Again, you've seen 186.7 bushels per acre for the last USDA number. It seems with some of the issues they've had in the Eastern Corn Belt, that this number could as likely be 184 as 186. If that happens, that's about 200 or 300 million bushels off of the supply-demand balance sheet, and would have some small amount of positive change in the for prices. The USDA did project ending stocks for corn to be record high. So I don't, I can see where we have uncertainty with regard to the size of the crop. No problem. We've had a pretty strong, pretty good moisture conditions. Crop looks good. Had looked very well overall. Even if we're lower than we thought, it'd still be 184, which is 184 bushels an acre, which would be 4 or 5 higher than anything we'd ever seen. But the USDA came in and also projected the usage that's record high. So here for feed usage, 5.9 billion back in 2019-20 marketing year, 6.1 billion was what they came out with in the September report. Now, and they've just had that, and that's probably going to get adjusted down by about 180 million bushels. What they had seen in the stock report. So with that, you're still at a record high feed usage that we're anticipating for this coming year. That was for the 24-25 marketing year, and you probably see some adjustment lower there also. Ethanol tied, almost virtually tied for the highest we've ever seen. Exports, 2.97 billion bushels. Highest we'd ever seen was 2.75. Ending stocks, 2.1 billion bushels. I wouldn't be surprised that number probably be increased by it'll be about 2.3 billion bushels. So consistent with strong usage. And I've already kind of tipped my hand in that I'd say there's about a 4 out of 10 chance, or 2 out of 5 of that happening. I'm thinking that probably the yields are too high. That will adjust yields down. 20 minutes, got it. So anyway, got that. You can see major export customers, Mexico. So it's important that we continue good trading relations with Mexico. Note, in terms of where we're shipping corn to at a record pace, China's not on that, but you can see a number of other places around the globe. So for corn, it's overall story. The USDA's projection, September 13.1%, about $3.90. That probably will be adjusted higher, given what the stock report from yesterday. And so here's probably more my own thoughts, my own perspective on where supply-demand balances will go. About a 40% chance that the USDA is right at 186 bushels an acre, 16.8 billion. Likely production yields shaved down to about 184 bushels an acre. Again, 2.7 million, still old records, 179.3. So instead of 16.8, now it's 16.5 and a half billion bushels of production. I wouldn't be surprised that if we start shaving, that the USDA eventually has to reduce some of its usage numbers. It's just so aggressive on the usage side that's going to be a challenge to reach that, and probably a lot of what we'll be looking at after harvest is whether we can reach the USDA's usage figures. And you see stocks to use. My own thinking that USDA projected about 390. If you come in with these changes, some less production, you're looking at about a 20 to 35 cent change in supply-demand balances as and the impact of supply-demand balances on prices. Okay, let's move. Oh, so that would be closer to this situation. USDA 390, something akin to 410, 425 if that yield does get shaved back. Okay. International issues. You can see here where I just want to show again the importance of Mexico. Mexico imports more corn than they produce. So and they're close. So we send corn to them. Brazil, just want to note, get strong production in Brazil, domestic use increasing. What's been going on in Brazil is that they've been increasing their food seed industrial usage, their basically ethanol use. Does Brazil eventually produce enough ethanol, they start to at least crowd some of their exports? That'll be interesting to watch. That would be a benefit to the U.S. For sorghum, just want to hit on some things quickly. Sorghum prices, because of weak exports, very weak exports for corn, for U.S. sorghum, depending almost entirely on China vacating U.S. purchases. We've seen cash prices here with harvest, probably a little farther away for sorghum than for corn. Topeka, Salina area, approaching $3, $3.08, $3.18, thereabouts. In October, the best new crop November bid I could see is under $3. And getting out to the west, a little bit stronger, closer to feedlots. Weak basis for grain sorghum. If it was not good for corn, it's pretty bad. For sorghum, again, that really see the impact of lack of closeness of any futures contract to tighten up grain sorghum basis here as you go forward, just the way it is. And there you can see the U.S. grain sorghum export figure. We had a pretty good year going in this green here in a 2024-25 marketing year. Then when China exited, you can see we really struggled to move much, and we're starting out pretty slow at this time also. Okay. So in the time we have left, I want to hit on some high spots for soybeans, for corn. For beans, there were some minor changes in the stocks figures for soybeans. 316 million bushels. That'll change the supply and demand balance sheet for soybeans a little bit, add about 16 to 17 million bushels to ending stocks. Prices up and down, trading within a range, 1060 from about August on, 1060 down to about 980. And with what's happened here of late with harvest approaching, we're heading towards the bottom side of 996 towards 980, et cetera. So, and again, China not participating in exports. Carry for soybeans, will your customers store beans? We do have some decent carries, again, from November to January, about 10 cents per bushel per month, just under that, about 9.5 actually. And from January to March, about 9 cents per bushel per month. So what's that relative to carry? You look at from November to January, we're at about 80 to 75% of carry. So in the short run, a little more motivation for storing beans, but this is an on-farm situation. Do your people store beans on farm? Some do, I suppose. They store more corn. Beans, I think, tend to move quicker into channels. So thought-provoking. And this is, again, on-farm. We plugged in 5 or 6, at least double that per bushel, then you'd bring this closer down to 40 to 50% cost to carry. So if they're going to town, into commercial storage, probably going to move the beans. So just not that many prospects for storage. Almost the same identical situation as we'd seen for corn in terms of beans. The 996 is and a half that what we closed yesterday. We had been as low in latter 2024 as 947. And again, so do we, if we go low and stay low, what's low? Well, when this last go around, when we got into that 2014-16 timeframe, we traded as low as 818, but a lot of times, 840 thereabouts, high about 10. So I don't know that you go lower price in any of these commodity markets and stay there. There are just enough ongoing questions and production risks that it tends to bring about volatility and some opportunities. Cash prices, Salina 897, Topeka 931. A little bit better in Hutchinson, Pittsburgh, 936, Hutchinson 923. In Pittsburgh again, so Topeka with the Ellsworth soybean crushing facility, Hutchinson, Pittsburgh near the Cherryvale crush facility, holding up a little bit better. Basis, pretty much. So you see this bid, pardon me, the projection of 535 for a soybean bid, soybean yield, and again, you'll see that I think there's about a 40-50% chance of that holding on to. If anything, that dryness that happened late season probably affect beans more than corn. So you come over here and see the current situation with the USDA's numbers, projecting about a $10 per bushel season average price, about 7% stocks to use, about a 45% chance of that happening, 9 out of 20. And if you take the 535 and scale that back by a couple bushels per acre, you're impacting about 150, 160 million bushels. Stocks to use come in, and instead of being 7% at 300 million, this will be 319 now. You're getting closer to 200, 225 probably. 5% stocks to use, $11.50, $11.75. So whereas for corn, you said, well, if we scale back yields, it's, 20, 35 cents. For soybeans, we're already not that far from being pretty tight. If you have scaling back of soybean yields, there's potential for more responsiveness in the bean market. So it's no small thing to stand up and say, well, $10 USDA's projection, if we scale back a couple bushels per acre, it's 11. So it's that would be a thought. And I would think if we get that type of a move on soybeans, given the conditioning we have of people right now thinking, gosh, I hope it's not $9 beans. We get 50, 60 cents, we're probably selling pretty quick, I would think. We being farmers and with their marketing opportunities. So $10 USDA projection, 45% chance, a couple bushels down lower, 11.75, 11.50, 11.75, and 1 out of 20, 1 out of 10 of we really get surprised of going much higher. Okay, so let's take a look at wheat. Finish up with wheat. We did see again a little bit of a change coming out of the Small Greens Annual Summary Report. 1.4 billion bushels for the size of the crop, up about 3.4, 3.5%. Wheat yields strong, and not quite record high, but pretty strong for this year. And with that, lots of supply, prices trending down. 491 on the early morning trade. And again, really no surprise, if anything, a hard drop overnight. We're in certainly a downward trend. Some carry in the market. Again, you can see from the DEES futures, not much carry really from the old September close to DEES futures, but really what matters is DEES to March, about 7 cents, about 7, 8 cents from March to May, May to July, again about 8 cents. So do we store? You look at carry from DEES to March, well, it looks like it's at on-farm storage. It does and when you look at cost to carry, it's about 75% of that. So probably, if people are still storing wheat, they're probably committed. They're staying with it, and they'll look out into spring to see what March may bring if they're holding on like this. Okay, and then to show this, I would say then 491 as the close yesterday, and you can see it's these charts all look pretty similar, don't they? They're all looking at this 2014 or so time frame as the last time when we didn't have anything going on that shook up the markets, especially for wheat. Ukraine-Russia war came off of that, and now we're back down to 491, wondering if we're heading for that. So, and I think we'll go use this as our last slide and take some questions. Cash prices at harvest, Salina, Topeka, 412, most bids lower, but we do have 1 or 2 bids, 442 on the high side, so somebody's filling trains or whatever. Hutchinson area, 491, 431. Again, also a few major terminal export bids coming into play. For next year, you're probably wondering, okay, I know this year's tough. What about next year? What type of prices we got? Forward bids right now, the best of them are still under $5. So I don't know if you ask the question, well, are we going to plant wheat? I think in western Kansas, well, we have moisture. We'll probably plant wheat. It fits in our crop rotations. If we plant wheat and it doesn't, if the markets fall apart, weather issues become a challenge, we can go in and plant something else. But it's kind of a good risk management move. So with that, we'll just move on and say we've got great exports going on right now at cheap prices. And so it's a conundrum. And I'll ask the question before you do. So how can we have such tremendous exports for wheat going on and the prices be so bad? Well, at least one thing that makes sense to me is that we have, if there's any wheat in storage, it's probably on-farm storage. Any wheat that went into town, into a commercial elevator, see large fall harvest, fall crops coming, and they're probably trying to make space and move it so they've got room for the next crop. So I realize that I'm standing in front of a pretty nice meal. Is it prime rib or something? You are. Economists don't compete well with good meals like that, but I think we have time for one or two questions.
Questions for Dan?
It sounds like to me that soybeans has the best opportunity to go up. And
That's
so
my
what
thought.
you're maybe telling the farmer is if he wants to or she wants to either buy calls or go on the futures board and get out of their, I guess, storage on farm, or not on farm, but through the elevator, because most beans will go to the elevator.
Yep. Yeah, we're really hesitant to say just buy futures, but you could do that if you had, you're really disciplined on stops, to limit yourself. You could buy calls, which is a little better mode. If you buy the call and it costs you at the money 20, 30 cents, then to make money on that, you've got to have that much of a run up to cover at least that. And really, I think the big issue on beans is that the U.S. and China haven't come to an agreement on what they're going to do. I do think, again, I have a family member that came from China. We adopted a daughter from there, so I try to pay attention to their moves. And they have a lot of machinations politically going on under the surface. And so if they have any change in leadership and that new leadership wants to be more friendly towards the U.S. in terms of trade, probably in terms of economic cooperation, probably the first place they go is things like corn, like grain, sorghum, and soybeans. If suddenly they come in and buy either one of those crops, that's a big deal for both of them. So I can't promise that, but just in trying to understand what's going on in their leadership and the changes that would occur if we go to a different regime, that could be there.